Good afternoon or good morning, depending on where you're dialing in from. Welcome to the Improved Financial Reporting and Analytics webinar hosted by the Clearline group. Before we get started, I'd like to cover a little bit of housekeeping here. We have about 45 minutes blocked out for this webinar, so we should have plenty of time for question and answer. And during the webinar, everybody's on mute, but we welcome questions, and you can ask them via the Q&A or chat box on your GoToWebinar screen. We'll be recording this webinar for future playback on www.clearlinegroup.com, so you can review it or forward it to your colleagues. With that, I'd like to review the agenda. We're going to go through kind of why we're here. Then I'll give you a brief introduction about Clearline Group and our two presenters here today. We're going to go through what's the business cycle. We call it business cycle, which is plan, execute, and assess within your organization. And then we're actually going to show a couple of examples of leveraging some technology to support that business cycle throughout your organization. So the objective for today is very simple, trying to help you understand how enterprise performance management, or EPM, and business intelligence go together. And we're going to really focus more on the business integration of the overall business process. But we are going to give a couple technology examples, but we're primarily concerned more about how, from a business cycle perspective, the technology supports that. Clearline Group is hosting the webinar here today. We are a group of highly experienced enterprise performance management and business intelligence experts. And what we're really focused here on doing here at Clearline Group is the integration between enterprise performance management and business intelligence, hence today's webinar. We're headquartered out of suburban Chicago, and the principals here at Clearline Group have been delivering enterprise technology solutions and analytical solutions for more than 20 years. The key here with Clearline Group is we've kind of been there, done that type of approach. With all the experience and our seniority here, we really understand how to take business solutions and apply technology to support them. And once again, we're really focused on the ability to integrate enterprise performance management and business intelligence. Along those same lines of combining business intelligence and EPM is we provide the advisory services to get you started. So we'll come in and we'll do assessments, roadmaps, the program management to support your technology and your business solutions out there. And then we wrap the advisory services around with our enterprise performance management and then the business intelligence. So we don't look at it as just a single solution. We look at it as an integrated solution all the way from advisory, enterprise performance management, and business intelligence. And what we're finding more and more today is that's where our clients are evolving to and getting to. And we're here at Clearline Group, we do already have the expertise and references to supply these types of solutions. With that, I'm going to introduce our two speakers here today. Our first speaker is David Abbott, Angelo, who is the director of Clearline Group's business intelligence practice. He has 17 plus years of business intelligence and data warehousing solutions. And what's unique about Dave is Dave has been on all three sides of the business and technology trifecta here. He's been a consultant. He's a consultant here at Clearline Group. He's also worked on the corporate side and also on the vendor side. He has an MBA in international marketing and finance, and he has lots of hands-on technology expertise here. Also joining us here today is Rob Wozniak, who's an architect here at Clearline Group's business intelligence practice. Rob brings more than 14 years of BI and data warehousing expertise to the marketplace. Once again, very well versed in technology, but just like all consultants here at Clearline Group, Rob has a very strong business and industry type focus within the organization. So with that, I'm going to officially turn it over now to Dave Abbott, Angelo, who's going to take you through more of the details of how we integrate enterprise performance management and business intelligence.
Okay, thanks, John. Appreciate it. I'm going to take a minute or two to talk about what we call the business cycle at Clearline Group. And you'll see in the middle we got our plan, execute, assess graphic, which you'll see throughout because that's what marketing people do. But it's really critical to how we approach business intelligence and believe that not just business intelligence, but information usage. It's key to the approach of that in that when you manage your business, you're really doing three things, right? You're developing a plan and a strategy, which entails setting targets, defining your key KPIs, and then also understanding what initiatives are going to help you get there. And then secondly, once you have that in place, you're going to be executing on that, and that is sharing that plan. It's implementing those initiatives, making sure you have the resources and processes in place, and then measuring progress over time towards those goals, and to see the effectiveness of those initiatives. The challenges here is that there's often a lack of linkage between the tactics and the strategy to the plan, and they're not tied together. And the plan is often static, while your business is constantly changing, which why you start to see more and more people moving to rolling plans and things like that. Some of the other challenges, and from an execution perspective, is that people don't see the plan. It's not communicated out, or it's just not available at the level of detail and granularity that enables them to manage to it on a daily basis. A bigger issue is that often people don't trust the information, or they can't act on it. Again, it's not accessible in a way that they can make daily decisions based on it. And when you start looking at the analysis piece of it, again, some of the challenges are lack of trust. So there's a different version of the truth. People have different sources for the same pieces of information, and often data is not available at the level that people need to actually get an understanding of their business. So from a overall business management perspective, information is critical, at all three of these phases, during the planning, the execute, and the assess. And it looks a little different though. So when you're planning, you're looking at management reporting. It's going to give you like a historical view of performance, and it's going to be at a fairly high level. And the goal here is to kind of see, trends, high-level trends in your business, so you can plan accordingly. From an execution perspective, it's much more operational reporting, so it's daily type reporting that's going to help you make a decision on a daily basis. Often starts from a dashboard tied to those key KPIs identified in your plan, and they're giving you navigation all the way through to the level of detail that you can actually answer questions. And we'll talk a little bit about specific examples of that in the next few slides. And then finally, from an assessment perspective, it's obviously it's looking at your performance to plan, but there's ad hoc analysis. There's looking at one-time projects to start to predict performance, and then it's looking at forecasting throughout. So sorry, I'm having some technical difficulties with my fingers here. All right, let's move down a couple pages. How do I page down? All right, sorry. So let's look at this in terms of like specific questions. So when we're talking about planning, you're really looking at big directional decisions that need to be made. And throughout this cycle, you're constantly making decisions. That's what your business is about, right? What's different from you and your competitors is the types of decisions you made and how well you make them. So from a planning perspective, you're looking at big decisions, right? Directional ones that say, like, how much are we going to sell next year? What market should we enter? What customers should we target? Are there risks we need to mitigate? What's our profitability target? What should it look like? These big decisions require supporting information and analytics. So you look at the assessment phase. When you're doing your planning, you're going to be looking at some analysis. So if I'm talking about how much I'm going to sell next year, I want to understand, well, what did we sell last year historically? And by channel, by region, by product. Are we going to be introducing new products this year? If so, are there similar products we can use as kind of a baseline and shape to forecast what we will sell this year with similar new products? We can look at how much do we need to spend on marketing? What did we spend last year? And if we were to add salespeople or increase advertising, what do we think the impact is on our ability to sell more this year? When we start talking about execution, again, it gets down to being able to answer questions on a daily basis. So we built a plan, target for sales for next year, and we've started to execute. Every day I'm going to have decisions to make. Things like, how should I discount? When can I promise delivery? Can I upsell, cross-sell? So with this execution, you're also going to have analysis that is required at a detailed level. If we talk about just, for example, discounting, what do you want to know, right? Well, I want to know how profitable is this customer. Do I want, give a big discount to everyone or just to my key customers? Do we have extra inventory I want to move? So maybe, if so, I want to, increase my discount and just try to get stuff off the shelf. If I offer a discount, what's it do to my overall gross margin target? And then, similarly, how does that affect my performance of plan? Or also, how am I performing a plan to date? Do I need a discount a little more just to try to get to my revenue target? Here's a quote I like from Dwight Eisenhower. In preparing for battle, I've always found that plans are useless, but planning is indispensable. And I think this plays into what we're talking about in the business cycle, because you're planning, but at the same time, once that plan's in place, you find that running your business on a day-to-day basis, things change fairly dramatically. So how do we, set the stage to have a plan that we want to track to, but be able to execute on it? And for that, we always build out with our customers what we call an analytic workflow. And the analytic workflow is basically just thinking through how am I going to get to my plan, and what kinds of decisions do I need to make on a daily basis to help me achieve my goals. And if we use gross margin as an example, every company, for the most part, manages to a gross margin target. And on a daily basis, if I'm a sales manager or if I'm a product manager, I want to understand how am I doing in terms of my plan. And so when you look at your plan, you're going to look at, am I selling what I plan to sell? If I'm off, how am I off? Is it, geographically, by sales org? Am I off by channel? Am I off by products? Where are my gaps? Once I understand that, then I'm going to look at what are the components of gross margin. So it's either revenue or cost, right? So if I'm off for a specific product, is it because I'm not selling enough or because it's costing more to produce than I anticipated? If it's more to produce than I anticipated, I'm going to look at, well, what's driving that cost? Am I carrying too much inventory? My raw material costs go up? And my freight costs different than what I expected? Am I spending a lot of in R&D, for example? So basically, we build these workflows that take us down from the highest level to the point where we can actually make decisions to answer questions and do things on a daily basis. But when we talk about analytic workflow, we're not just talking about enterprise performance management or business intelligence. We're talking about a workflow that is separated from the underlying architecture. The architecture supports this process of making decisions regardless of where your data sits. It's technology independent. And to that end, at the bottom, it could be best of breed. So you have different technologies at different layers, for your warehouse, for your predictive analytics, for your operational reporting, or it could be a single vendor solution that integrates all the components. The key here is that from an end user perspective, it's seamless. This is a sample reference architecture that would support that. And what you see here is different data sources all being fed into a common warehouse layer potentially, with a separate layer for EPM, and typically that's going to be products like Hyperion, Space, or Planning that are OLAP based. And then on top of that, you have a BI layer, which is going to be your presentation layer, often dashboards, that goes against multiple data sources. So it could be going against your OLAP cubes that contain your EPM data, your planning, your plans. It could be going against your data warehouse, and it could at points actually be drilling right through into the transactional detail that feeds into the data warehouse. So let's talk about a specific business case, and we'll talk about the business pain, the analytics done on it, and then how an architecture supports this. So I'm going to use an example of a customer we had that is a manufacturer of oil exploration equipment. And basically, if you were to do oil exploration, they would provide everything from toilet paper to put on the offshore rigs down to, $30,000, $40,000 drill bits. And their challenge is that they were carrying a lot of inventory for a company of their size, and they figured out that the carrying cost of the inventory for where they at versus where they wanted it to be was probably translating to a couple $100 million a year of extra carrying costs, which has a direct impact obviously to your bottom line. They had these challenges because they had acquired 20 plus companies over a few years, and each company they acquired had its own inventory system. And so what this meant from a business perspective is that when a customer called to buy a product, they would look in their inventory system, and if it didn't exist in their inventory, it didn't exist, even though it could be sitting in a distribution center across town in a company that had been acquired, a different company had been acquired. So basically they were losing opportunities to sell products because they didn't have visibility into the inventory. So what we did is we built them a centralized data mart to track inventory. We also added purchasing information across companies and vendors, so that as an organization now they had a holistic view of their inventory as well as what prices they were paying across all their vendors and all their products. This allowed them to actually proactively transfer inventory across locations. So for example, so they could do three things. They could see products that were in stock at other locations and make a sale. Secondly, they could look at what they called hardcore versus slow or fast-moving inventory. So hardcore being inventory that they hadn't sold for 2 years. They can look into their own location, say, I have this product that's slow-moving, and I could find locations where they sold a lot of it, and I could transfer the stock. And that would allow me to replenish my inventory with parts that I sold a lot. So over time, this drove a pretty dramatic reduction in their carrying costs. So we put it all together, when we go back to our business cycle, what they're doing here is they're planning their target inventory levels, their turn rates, their gross margin. These are obviously driven by visibility into inventory, gross margin driven by selling more, but also reducing your purchasing costs. On a daily basis, this meant I had to have visibility into my inventory to actually sell products. I had to have visibility into what's hardcore versus fast moving. This will allow me to go in there weekly or monthly, however, and transfer products. We start thinking about the underlying analytics that allows me to move products from place to place. We're looking at how much inventory we're carrying, and in a detailed level to start to benefit from lower prices. We're looking at what price are we paying across vendors for a part, and within a specific vendor, when we go to negotiate, I want to know my range of prices is so I can negotiate my lowest price. So from an architecture perspective, looking at our kind of reference architecture, in this example, we basically had kind of three types of users. We had the planners that would be looking at target inventory levels, setting your target turn rates, your gross margin. On the lower right-hand side, we had product or salespeople, distribution managers, that wanted to understand what products they had to sell and wanted to be able to move products around. They would have a view that was product-centric, again, going against dashboards that were all leveraging both EPM and detailed data. And then on the lower left-hand side, we had procurement people leveraging the same information, but looking at it in different ways so they can actually look at prices across vendors and so on. So with that, we're going to do a couple quick demos. Mine, I'm going to walk through just what I call a PowerPoint demo, just a few screenshots that highlight the integration of data from a GL down to the detail level. This one is built on OBIEE. The challenge is here that our customers had is that they're using Hyperion Financial Management, and they were able to look at data at a very high level, data stored in Essbase. But when I looked at a specific account to understand what their expenses were, for example, it was difficult to get down to the detailed ledger journal entries that they could actually understand exactly where their costs were up or down. And to do that, they actually had to pull data from their ERP system into a spreadsheet and then compare the numbers between HFM and the spreadsheet. So what we've done is we've built an integrated solution where they have one dashboard that they drill into. They start with looks at the GL, and from there they can drill through into the journal entry detail all in a matter of seconds. So this is the very basic high-level detail. They have a GL summary. On the left side you can see they can select their time period. They can select the accounts they want to look at, locations, projects, and so on. And once they do, it's going to pull back a detailed report that has the ability to look at accounts. You'll see on the top they have the accounts for each period, and then on the bottom it's the details showing a breakout for any particular period for a group of accounts, company, and cost center, and so on. At this point, I could drill on any given period, account, company, intersection, and it'll take me to my journal entry line item detail. And so you'll see then that pulls back all the actual detail for that period, for the account, for the category, and so on. And at this point, I actually see all my individual transactions. And then I can export that into Excel if I want, so I can do some offline analysis as well. So with that, I'm going to turn this over to Rob Wozniak, who's going to walk us through a different example using ClickView. And Rob, I'll give it to you now.
Okay, thanks, Dave. Yeah, so what we've got over here, just a dashboard put together in ClickView, and I think what you see at the top, you see in this dashboard at the summary level, we have all our KPIs kind of summarized at the top. And so we see a bunch of, we're looking at metrics related to sales, expenses, receivables, inventory. So typical types of things maybe a manufacturer or would be interested in. And so, but one of the things you notice right away we've gotten here, if you look at, we have a bunch of target figures. For instance, our sales target. We're basically able to start comparing our results, our actual results, to plan. So the idea here is that sort of those planning metrics, those things we came up with maybe through our EPM process, really aren't enough. We want to be able to integrate other sources of data to really tell us, well, how are we doing against plan? And so we're building this process. We're building a process of continuous improvement to get a more complete picture of what's going on with our business. And on our dashboard, this was built with ClickView. ClickView is one solution, one technology solution. It's great for putting together dashboards and doing so real quickly. And we get a nice ClickView has something called an associative data model. So whenever I make a selection, for instance, I'm going to make a selection on a time selection. So we're going to look at 2012, and what ends up happening is the whole dashboard becomes correlated with my selections, and also you can see that the selection we did lose connection to the server there briefly, but the response from the database is instantaneous because everything's already been loaded into memory. Because that's a feature of ClickView. We're not going to go too much into the technology there. We're just going to kind of demonstrate this principle of being able to bring in all these different data sources to arrive at a more complete picture of what's going on. And in this case, looking at plan versus actuals. One of the other things we can do is in our dashboard here, we've incorporated some traffic lighting so that we can see, there's some red marks up here, what's going on here. And one of the things we notice is that, we see that, our accounts receivable, the percent overdue in our receivables is 25%, which we've established in our dashboard as too high. So what we've done in this dashboard is we've set up different tabs, based on different types of metrics and information. So we're going to go and say, okay, what's going on with our receivables that it would cause it to be, at an unacceptably high level. So we go here, we drill into the receivables tab, and we can see a couple things that we've built into here. The first is that in terms of days overdue, we have one company, Valley Solutions seems to be the leader in that space, with a total of 144 days past due. So we're also going to do something we can do here in this dashboard, which is sort by the overdue amount. So we want to get to right away kind of the heavy hitters who are really contributing to this big overdue figure. And again, we can see Valley Solutions seem to be leading the way in terms of having the biggest bulk of past due receivables. So we say, well, Valley Solutions, what's going on there? This is now we want to be able to drill in and get more information about what's going on with this account. And so we drill into Valley Solutions, and we can see that our sales rep, if we go over, actually I think we can go over to sales analysis, tell us a little bit more about this account. We can see that we had a lot of sales with them in 2011, and things seem to have dropped off in 2012. And we can also look and see, well, we have a sales rep, Judy Rowlett, who's responsible for that account, so we're going to follow up with her to see what's going on here. So this was an example of being able to start at the KPI level, build a dashboard that had some traffic lighting capabilities, some alerting capabilities, and really because we have all this data available in one spot, we're able to really take action and really get to the bottom of things.
And the key here, right, is that now Judy Rowlett can actually talk to the customer and see what the issue is, because like you said, there's been a drop-off in sales, maybe it's customer satisfaction issue. So there's actually actionable information here.
Yeah.
All right. Thanks, Rob. That was great.
Well, thank you.
So with that, I believe we're ready to move to some questions. We've got time for a couple here.
So once again, just type in your questions on the chat box, and we will try and do them in order here, but we'll take them as we get them here. So the first question that came in was, do you need a data warehouse to enable this integration? I'm assuming you mean the integration between EPM and BI. Rob, Dave, you want?
Sure, I'll grab that one. So, I guess when we're talking a data warehouse, we're often talking about a data warehouse strategy, and what this means is that, you need to deliver information in a consistent way, but I think actually like Rob likes to say is you need to start from where you are, and the key here is having a strategy and an understanding of what information is where and how to get to a point where you have consistent information. Ultimately, you'll want a data warehouse, but you can start from where you are, and part of the benefits of doing a workflow, it gives you kind of your landscape of the information you need, and using tools like ClickView or OBIE or Business Objects that have this metadata layer allows you to build dashboards that pull data from the right sources seamless to the end user. And ultimately, when you build out your roadmap and you build out a data warehouse in a future point, you just redirect. So the key is you want to have a data strategy in mind as you build these things, but you don't necessarily have to have a warehouse in place today to be effectively, navigate from EPM information into more analytical type of information.
The next question that came in is, EPM is pretty financially focused. How does non-financial data come into play?
I'll let Rob take that one.
Yeah, I mean, most companies, I think, plan around financial metrics, right? Because at the end of the day, every company is going to judge themselves how well they're doing financially, or at least the stakeholders and the owners of the companies are going to do that. But really, what's impacting those metrics, those financial metrics, are the non-financial data. So, if we go back to that, idea of the manufacturer is looking at, cost of inventory. How much is that impacting their financial performance? So, a clear instance of, having, that kind of non-financial data, something like inventory, which can be, pretty heavy in terms of, data volumes and stuff, depending on, the nature of the customer, of the manufacturer, or the person doing the analysis. But certainly, a company with a lot of past due inventory, a lot of old inventory, is going to have a huge impact on financials. So it's really, I think, depends on, it's really the nature of the business. But, nobody's in the pure money business. I guess maybe some kind of are, but it's still like, it's the non-financial data that sort of
your performance, really.
Yeah, exactly.
Okay.
So, got another question here is, how much work is this, and don't people do this already?
And I'm going to assume that, we're talking about, I guess, the integration of EPM and BI and looking at data across different systems. And really, this comes down to how much time and budget you allow. People are definitely already looking at EPM and BI data together, but the reality is it's often by hook and crook, right? So they're pulling information out at EPM and they're looking at it, but they're jumping from, a query into like an S-based view into maybe a reporting application, maybe into they're going to their GL then and doing an extract to get the information. So people are doing it, but they're doing it very painfully. Mm-hmm. And so what we're talking about is building an architecture with an understanding that people need to do this every day, and they need to be able to seamlessly navigate from performance management information, your plan, down to your detail where you can actually take action. And that's kind of when we're talking about the architecture, it's very important that you plan for this type of stuff. But people do it, but a lot of people don't do it well, and not a lot of people are really doing it seamlessly, and that's the key.
We want to be cognizant of people's time here. We have a couple more questions that have come in, but we will just contact you offline on those. I just want to, once again, I'll never really introduce myself. My name is John Schmidt here from the Clearline Group. My contact information is jschmidt@clearlinegroup.com. Marty Phelps is another individual here at Clearline who would be more than happy to help you guys out. I really welcome, thank you everybody for attending today's webinar. Rob, Dave, thanks for the great content and information you provided. Hopefully we're able to instill a little insight on the benefits of integrating enterprise performance management and business intelligence. This webinar is being recorded and will be put on clearlinegroup.com for your future reference. Thank you, everybody, and have a great day.